Here's a look at market action for the day and how things shaped up. There are four factors which clearly marked market action. One, it was a story of a strong start and a slow finish for Indian markets. B, high beta trade clearly reversed. Real estate stocks were under intense pressure. There were red arrows everywhere also when it comes to some of the key metal names. Auto stocks, they selectively outperform, and trading volumes today were higher than the 10-day average, which means that there was a lot of local unwinding. Bear in mind that the institutional appetite for Indian markets of late has been waning away, and what looked like a perfect November, things are now looking slightly ugly because globally risk-on trade is getting reversed, and because of the decline in Indian currency, foreign institutional investors as of now are taking it easy. Some metal stocks which were under pressure today: JSW Steel, Sesco and Sterlite Industries. Let's also analyze the brokerage impact for you. Jubilant FoodWorks and Bajaj Auto, both these stocks got upgraded. Bajaj Auto got an upgrade from Bank of America Merrill Lynch. Jubilant FoodWorks has got a big upgrade from Goldman Sachs, and that brokerage effect was not visible on Bajaj Auto, and it was also not visible on Jubilant FoodWorks, which started the day well in the green and then caved in towards the second half of trade and finally closed below 1280. So what's the way forward for Indian markets from these levels? Let's discuss that with a very special panel. Ashwini, as always, you go first. If I look at the market breadth, things are looking shaky. If I look at Nifty, Nifty is coming under pressure, and if I look at real estate and metal stocks, high beta trade is reversing. Do you think we are in some kind of a downtrend now?
Well, even if it's a short-term downtrend, it's not, it doesn't have great momentum on the downside, and the better strategy would be, since we are above our 200 DMA, is to now look for when the market reverses. Whenever we get past 5620, I think that would be a sign of strength. So given that the downside momentum is now sapping, international markets are kind of looking up, and a lot of the problems are discounted, parliament session, fiscal cliff, etc. And as these things start clearing out, chances are we could head on the upside, but you need to wait for strength to come back rather than to just jump in. But overall, it does seem like market is now finding it difficult to move lower.
Paras, what is your assessment? Is it a good time to put money to work, or we could be staring at lower levels before the year end?
I think it's certainly a good time to be putting money into equities for the simple reason that unlike 6 months ago, we had a government which seemed quite paralyzed, but now we have a government which is on the go and is looking at proving a point. So while the initial gush of announcements have taken the market from around 5,000 levels to 5,600, I think maybe the next set of announcements, whenever they come in, will kind of reinforce the confidence of investors into the market. So my sense is we are near the bottom, unless there is something very untoward that happens globally, or there are some political issues in India. I think we are on course, and every dip, in my view, should be really taken in for buying into high quality stocks.
Anup, what is your portfolio strategy at the current juncture? Are you putting money to work, or are you taking it slightly easy?
Well, from a portfolio perspective, what we've done over the course of the last 6 months, I would say, is moved our sort of stance from more defensive orientation to a more balanced approach, where we've taken our portfolio betas up, have a fair mix of interest rate sensitive names as well. Taking the view that eventually, one is valuations clearly are a lot more reasonable in that space, and B, eventually we will get into a downward rate cycle, and the economy at some point will pick up with a lag. So we've just tried to balance the portfolio out, much more now, and clearly this continues to be a market where bottom-up stock selection seems to be adding a lot more value than your top-down views, and that continues to be the focus area for us. So just trying to make sure we have some good ideas identified and the right weightages, because within a sector as well, I think how you pick and choose your stocks is making a fairly dramatic difference to portfolio returns. So a lot of bottom-up focus.
Well, what caved in today was high beta, real estate and metal stocks. Let's look at some real estate stocks once again. Anantraj Industries, HDIL, DLF, Unitech. It was pretty much across the board. Honestly, red arrows everywhere. Now, real estate stocks, they started the month of November with some promise. Till about Diwali, real estate stocks were holding on, but now things have reversed. Ashwini, technically, how would you analyze real estate stocks? Do you think what we saw in early part of November was more like a false rally?
Well, whenever a rally is kind of coming to its end, real estate tends to start moving higher. So you could say that was a high beta rally, and now people are coming back to their senses. But chances are these stocks are so beaten up. Like why was media going up? So both these, beaten up sectors, low downside. So chances are that they could have more rallies, but the corrections will also be equally sharp. But clearly, I think if you are more selective, like choosing Sobha or Godrej Properties, you will be safer than, trying to trade these smaller stocks, up and down, because they'll move up 50% and they'll lose 25%, and they may not be for everybody.
Anup, at the current juncture, are you hot on real estate, infra, for that matter, any of the beaten down sectors?
Well, to some extent, yes. I mean, so interest rate sensitives is how I'd categorize the whole area. So it's not just real estate and infrastructure, but a whole host of other consumer discretionary, some other sort of banking, for instance, public sector banks. So we've added a whole mix of names. As I said, I mean, these are not sort of dramatic shifts, but these are just better balanced in the portfolio is what we're looking for. So we've added some of all of that in the course of the last 6 months, yes.
Let's look at key sectors you should monitor tomorrow. I would say the number one sector has to be autos, because consumer discretionary as a group, as a category, it has made a roaring comeback. The auto index today appreciated by about 0.5%. The auto index yesterday appreciated by about 1%. Stocks like Mahindra and Mahindra and Maruti along with Bajaj Auto, they are marching towards the new all-time high. That's Mahindra and Mahindra for you in your screen, which is at 938 rupees. Paras, what is driving Mahindra and Mahindra?
I think it's very easy to kind of observe and conclude that Mahindra is fundamentally the best performing stock. If you look at the numbers, monthly numbers, be it the quarterly numbers, amongst all categories of automobile stocks, you've seen Mahindra really outperforming all of them, and that too by a margin, be it the SUV segment, be it in the segments that you mentioned, except for maybe the two-wheeler segment. I think that clearly sets apart Mahindra. The aggression is very much evident in the way they really are operating as a company. So I think, and that is probably kind of evident in the way the stock is behaving in the market. The stock has really moved up quite well, but anyone with a longer term perspective of at least 15 to 18 months, Mahindra continues to be a very good stock.
Stock's up 13% already, and Mahindra this year along with Maruti, they've been marked outperformers. When we started the year, the market was under the impression that consumer discretionary as a category will underperform because high inflation will hit consumer sentiment and consumer spending. But if I map October dispatch numbers and the kind of commentary we've got from most of the auto companies when it comes to festive demand, or especially the pre-Diwali sales, I think it's quite extraordinary. So I think in the near term, the way I see things is that consumer staples may correct, but consumer discretionary as a category, as a group, they really have a long way to go. Now, it was a strong day for Mahindra and Mahindra, but it was a volatile day for Jubilant FoodWorks. Jubilant FoodWorks, it started the day with some promise, then that Goldman Sachs report kicked in, it helped that stock, but towards the second half of trade, Jubilant FoodWorks caved in and it cracked below 1300 rupees. Ashwini, I remember we were discussing this stock in the morning. What should traders do now?
Well, it's in a massive sideways consolidation, and for the moment, it does not seem like it's immediately going to, break out of that. But once we get past, say, 1400, then I think the stock has consolidated enough and it can probably do another 175 points from there. So maybe 1575, 1600 is possible on Jubilant. But clearly, it will not move the way it used to move. And now the jumps could be, 150, 200 points in each leg.
Anup, you also have a strong exposure to cement. Now, cement stocks this year, they have been marked outperformers. At the current juncture, are you still hot on cement?
So I guess, in some of these sectors, the sort of key question to keep asking again and again is, what is the pricing scenario, or do they still have enough pricing power? So across sectors, that's a constant question we keep asking ourselves. And as far as cement is concerned, we've seen tremendous pricing power in the past. We're now beginning to see a little bit of an easing off. But by and large, just given capex plans and capacity additions, it does look like pricing discipline will sustain. These stocks have also run up quite a lot. So we're looking to probably at some corrections to probably sit and add further into cement. So we like the businesses fundamentally, but I'd say prices probably have run a little ahead of themselves. Again, that's a very generic comment on the sector. Having said that, there are individual stocks that we may still like and be quite happy to add even today.
Paras, now there is a reason why cement stocks are outperforming. Demand supply mismatch, cement companies are enjoying pricing power. But do you think from a medium-term perspective, cement stocks are fairly priced and they are priced to perfection?
No, I don't think that is the case, except for a few stocks which look a little expensive, especially the frontline stocks. My sense is that the stocks in the second rung and the third rung, they do hold out a good amount of promise. And let us also accept the fact that whatever run that you've seen in cement is without the necessary infrastructure push. We've seen the volume increase, we've seen the price increases happening without infrastructure really picking up. So if at all we see infrastructure thrust being done by the government in the next 12 to 14 months before the election, then cement companies probably will have a better momentum, and to that extent even better pricing. So I think on every dip one has to be overweight on cement rather than say, okay fine, this looks like it's stretched and booking profits.
Ashwini, technically, do you think cement stocks have corrected enough? Have they retraced enough? Do they warrant a buy now?
Well, they've just started correcting. Things which have gone up 200, 300%, something like Ultratech, which used to be 700-800 rupees stock. I think there is some downside. They will all probably correct to their 200-day moving averages before they restart a rally. So I think this correction will continue, and we are getting close to those levels. Ambuja, that level is about 175, 180. On Ultratech Cement, that's around 1650. So some more way to go, and it's good if stocks correct, consolidate, and then again move higher.